Stocks on Wall Street end the session lower as tech sell-off deepens ahead of Nvidia's earnings. Dow closes down nearly 500 points, while S&P 500 logs its longest slide since August. Markets in Asia mirror moves on the Wall Street to trade with cuts. GIFT Nifty is indicating a flat start for the Indian markets. Crude prices edge up as traders assess the impact of sanction on Russia. Gold gains on soft economic data. Traders also weigh US rate cut chances. HUL sets December 5th as the record date for determining the eligible shareholders who will receive shares of Quality Vault's shares in 1:1 ratio as its ice cream business demerger becomes effective on 1st of December. Infosys will open its 18,000 crore rupee buyback on November 20th, offering to repurchase up to 10 crore shares at 1,800 rupees each via tender route. The buyback will close on 26th of December. Hello, good morning. You've tuned into Power Breakfast on CNBC TV 18. I'm Vinny Motiwala. Thank you so much for tuning in as always. And in terms of the Asian markets, let's start with that, right? Given that we saw a bit of a sell-off coming in on the Wall Street, Asian markets today have opened up a big mixed in the trading session. Look at Taiwan index, very flat, 0.04% decline there, while Hang Seng is managing to hold on to mild gains over there. Now, other than that, when you're looking at it in terms of the other indices, ASX 200, that's all Australian index very flat in terms of opening. Hang Seng, like I mentioned, a very muted start there. Kospi is seeing a sharper decline, down almost 0.5%. So that is what we'll keep an eye out on. Nikkei is holding on to gains on the flip side of around 0.6%. So very mixed opening, an indication that we're getting in from the Asian markets this morning. Nifty implied open very, very muted start, just 2-point decline right now. So we'll see where the Indian markets are going to be headed. Yesterday, obviously, we ended the trading session with cuts of almost 0.25%. Today, whether we see a further decline or we recover from that is key to watch out for. As of now, a muted start for the Indian market, but we have a lot of global market action that's taken place, a lot of cues that have come in from the Indian market as well, and we have a team of research here to set you up for trade, tell you which are the important stocks to watch out for as well. First up, let's go across to Vivek, who's joining us to tell us which are the important market cues to watch out for in today's trading session. Good morning, Vivek.
Well, good morning. Like you mentioned, the kind of sell-off that especially the tech, both software as well as hardware, have seen in the US markets actually drag them quite significantly lower. US markets now have seen a prolonged slump, especially as far as the tech side of the market is concerned. Now, when you're looking at how commodities actually fared last evening, oil prices ended marginally higher, went up by over 1%, now trading near the $64.8 a barrel marker. Now, coming to the Indian markets, especially given the kind of cues that we saw yesterday, we managed to snap a 6-day gaining streak. All of the sectoral indices yesterday actually fell across. And however, there were a couple of listings, amongst them PhysicsWallah, it was an extremely strong listing, almost a 37, over a 40% pop. In fact, Industrials Day was largely dominated by large trades that took across some of the names that tracked quite closely. So the first one, of course, was Mphasis, Paytm, Emcor, a few other smaller block deals too happen in the session. What is it that we'll be watching out for today? Well, there is a listing, Tenneco Clean Air. That particular stock would be watched out quite closely. And keep an eye out on KC International. The company has been barred from power grid projects at least for the next 9 months. That could see a bit of a knee-jerk reaction in the session. Like you pointed out at the start of the show, Asian markets, GIFT Nifty, all of them pointing to a subdued start for our own markets today.
Okay, thanks so much for that, Vivek. But let's move on and go across to Upasana, who's here to tell us which are the important stocks to watch out for in today's trading session. Good morning, Upasana.
Good morning, Vinny. First up, let me start with TCS. The company has signed a 5-year deal with NHS Supply Chain to transform healthcare delivery using AI and cloud. Next up is HUL. Ice cream spin-off plan effective from 1st of December is what the company has indicated. And it has also declared December 5 as the record date for the share issue in the ratio 1:1. Next up is Infosys. The 18,000 crore buyback is to open on November 20th and closes on November 26th is what the company has indicated. Next up is LTI Mindtree. Company has announced expansion of its global collaboration with Microsoft. Next up is MGL. The company says that the rectification work of GAIL's damaged main gas pipeline has been completed, and the company confirms that the gas supply by GAIL is fully restored and operations are back to normalcy. Next up is KC International. Company has been excluded from participating in tenders of Power Grid and an award of contract for a period of as high as 9 months. Next up is Choice International. The arm acquires 100% stake in Iolisa Consultant and adds nearly about 2,000 crore plus in live orders. Next up is Azad Engineering. The company signs agreement with Pratt & Whitney Canada Corporation for development and manufacturing of aircraft engine components. Next up is GR Infra. On the back of order win, the company gets an order worth 262 crores from Western Railways. And lastly, coming to CAMS, the company has fixed December 5 as the record date for the purpose of share split. So all in all, we'll be closely watching out for all these stocks today.
Okay, Upasana, thank you so much for that. But let's go across to Sudarshan, who's here to finally tell us what we are keeping an eye out on in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So it was weekly expiry yesterday, and after that, we have seen that global cues remain weak, and range for Nifty continues to be in the range of 25,700, and on the upside, call writers are very active, first at 26,000, and then next major resistance comes around between 26,300 to 26,500. As far as the flows are concerned, just we have seen a minor buying by FIs in the index futures yesterday. They have bought more than rupees 117 crore, and also they've added longs position of around 400 contracts, reduced short positions of around 72 contracts, but they remain heavily on the short side, and now longs exposure is around 12%. In the options data, the reason I've told you that call writers are very active, look at the 26,000 call options. There, the increase in the open interest was of almost 47 lakh shares, and the similar increase in the open interest was seen in 26,500. But at the same time, premium for both these options has seen a sharp fall. But on the put side, 26,000 put has seen addition of 24 lakh shares. Here also premium has seen a minor fall, but 25,500 put has seen an addition of 22 lakh shares, and premium for this put option has seen an increase. So now on the downside, first support remains around 25,800, but if Nifty slips below that, the next support comes around 25,500. On the upside, first resistance is 26,000, then 26,100, then the door opens for 26,300 and 26,500. As far as Nifty Bank is concerned, support remains around 58,600 and resistance 59,000. One stock remains in the band, that is SAIL. One stock that has seen fresh longs after a long time is Container Corp, and some of the stocks that have seen fresh shorts, RVNL, Ireda and Piramal Pharma.
Okay, Sudarshan, thank you so much for that. Surely we'll be keeping an eye out on all those names in the world of F&O as well. But we're going to sip into a very short break. And as we sip into the break, here's some important market opinion coming from Gautam Shah of Goldilocks Global Research. Listen in.
Our last two interactions, I did speak about PSU banks being the poster boys. I think they've had a phenomenal run if you look at the top 4 or 5 names. And I think the PSU banking index is going to do much, much bigger things, even from current levels. The private banks will do well, but then it's going to be in line with the Nifty returns. But the real trade is with PSU banking, and the overall financial space, NBFCs, housing finance companies are all likely to do well and take this market higher. Then if you look at the top PSU banks, even at current levels, including the top PSU bank there, I think there is potential for 15 to 20% upside, something which I don't see from any other financial stocks. And I think the top NBFCs also we've liked. And third in the pecking order would be the housing finance companies, which I think is a trade on what RBI has done and the pickup in the economy. So that would be my pecking order: PSU banks, NBFCs, and housing finance companies. I do believe that the market is at the perfect platform to confirm that breakout above 26,100. And once that gets confirmed, we are looking at 26,700, possibly this year itself, and thereafter 27,500. But I think the leader will still be the banking and the overall financial space, but I think it will be very well supported by the energy space led by Reliance. I've liked the way it has shown relative strength in the recent past. It's a stock that has not done so well in the last 1 year, but I think the signals are there to suggest that even it could move to lifetime highs and beyond. And not just Reliance, the entire energy index seems to be on the cusp of a major breakout. And if that were to happen, I think a 15% move on that index is likely. So IT, we remain negative. So I don't think technology is going to do anything special, because I think that's a multi-month underperformance that IT will go through and is still going through. But Reliance and the entire banking space will help this entire market higher.
Okay, on that note, we're going to slip into a very short break and we'll come back with more on the other side. Welcome back to Power Breakfast on CNBC TV 18. And now moving on to the US market and what happened on Wall Street. Wall Street ended lower for another session with Dow falling another 500 points. S&P logged its longest slide since August as well. CNBC's Bertha Coombs is getting us a wrap on what happened on Wall Street.
U.S. markets were down across the major indexes in Tuesday trading, although rebounding off session lows as the tech trade continues to face headwinds over AI valuations. The Dow lost 499 points. The S&P 500 was down 55, while the tech-heavy Nasdaq fell 275. A big victory in court Tuesday for Meta, winning its antitrust trial against the Federal Trade Commission. The dispute began 5 years ago when the FTC accused the social media giant of being a monopoly after its acquisitions of Instagram and WhatsApp. It could have been forced to sell off those businesses, but a federal judge released an opinion today writing that the government failed to show Meta held a monopoly in the social networking market. And Microsoft on Tuesday announcing new strategic partnerships with NVIDIA and AI startup Anthropic in the latest sign that Microsoft is working to reduce its dependence on OpenAI. Microsoft will invest up to $5 billion into Anthropic, and NVIDIA will invest up to $10 billion, while Anthropic will commit to buying $30 billion of compute capacity from Microsoft. But that deal doing little to help shares of NVIDIA and Microsoft, which were both down about 3%. But a source tells CNBC that with that deal, Anthropic is now valued at about $350 billion. That's what's happening here in the U.S. Back over to you in Mumbai.
Thanks so much for that. Meanwhile, Donald Trump said that he was speaking with various people about the Federal Reserve Chairman's job and had some unexpected candidates on the list of those who might replace Jerome Powell. Listen in.
Have you started the interviews for the Fed chair?
Yes.
Who have you interviewed?
I think I already know my choice.
Who is it?
Well, I liked him, but he's not going to take the job. He refused. You like Treasury better, right?
Much better, sir.
So we are talking to various people. And, I mean, frankly, I'd love to get the guy currently in there out right now.
And Ashwath Damodaran of NY Eastern School of Business says that tech stocks are overvalued and are riding on just the money coming in, but with no guidance on where the money will be invested. Listen in to his views.
I think it's part and parcel of a big change coming to the economy and markets. And I think we've overstretched ourselves in terms of what that change can accomplish in terms of money being made off that change. People are throwing money at investing without really telling me where the money is going to come back from those investments. Starting with, Sam Altman, when he's asked about how does OpenAI expect to make money? Blowing off that answer without giving me a business sense of OpenAI, what I get are companies like Oracle, like Meta, like Microsoft, like OpenAI throwing insane amounts of money to building AI architecture without providing any tangible. I mean, I don't even want evidence. At least give me a story of how all this investment is going to play off in terms of products and services on which you can make money. I think the more a company spends, the more caution is called for. So I would just take the AI spending of each of these companies, now outside of NVIDIA, and the more spending they have, the more cautious I get, which is one reason it might, if you're planning to buy one of the Mag 7 stocks, it's not a great time to buy any of them. I would say buy Apple because it's the most cautious of these companies. And this is a time where caution might actually be the byword.
Okay, that's the view on IT stocks coming in from Ashwath Damodaran. But moving on to some other developments in the US, Saudi Crown Prince Mohammed bin Salman received a warm welcome at the White House. President Donald Trump greeted him with a ceremony that featured marching bands, flag-carrying horsemen, and military flyover. The visit emphasizes deepening ties between Riyadh and Washington. This is Saudi Prince's first visit to the United States since the 2018 murder of journalist Jamal Khashoggi. Addressing the media, Donald Trump has said that Saudi Arabia has agreed to invest $600 billion in the United States, and Saudi Arabia was being designated as a major non-NATO ally.
I want to thank you because you've agreed to invest $600 billion into the United States. And because he's my friend, he might make it $1 trillion, but I'm going to have to work on him. But it's 600. We can count on 600 billion. But that number could go up a little bit higher, yes, or I don't know. We'll see. But we appreciate it very much. So Saudi is going to be investing at least $600 billion, and that means investments in plants, in companies, money on Wall Street, and what it really means for everybody that really counts is jobs, a lot of jobs. Tonight, I'm pleased to announce that we're taking our military cooperation to even greater heights by formally designating Saudi Arabia as a major non-NATO ally, which is something that is very important to them. And I'm just telling you now for the first time because I wanted to keep a little secret for tonight. I just heard him say, "Oh, that's nice. That's another point you won today." And signing a historic strategic defense agreement, which we just signed a little while ago. So congratulations. It's our great.
And continuing with other updates, the U.S. House of Representatives passed the bill on Epstein files with a 427-1 vote, sending it to the U.S. Senate, which unanimously agreed to pass the bill and now will go to President Trump for his signature. The development comes as survivors of Epstein abuse have spent months at the Capitol Hill demanding the release of files. The bill now heads to President Trump for his approval. Okay, on that note, we're going to slip into a very short break. On the other side, we'll come back with cues in the world of commodities. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV 18. Now let's get to the updates in the world of commodities. And as always, we have Manisha Gupta joining us for that. Good morning, Manisha. Today, what's on the radar? Crude, gold, silver. What are we keeping an eye out on?
Well, I'll start with the crude oil prices because we've seen 1% of gain in the overnight market. This is after traders are weighing impact of Western sanctions on Russian oil flows. The U.S. president also says that his administration is now interviewing for the next Fed chair. So a couple of these events really bringing in uncertainty into the markets and is the reason you've seen the prices gain up. Also, there's a report from Goldman Sachs which says that the crude prices could decline in 2026 because of higher supplies, but the prices have a chance of going to $70, but that is only in the instance if Russian output falls. In the precious and the base metal prices, well, everything really seems to be going down on profit taking. One, because the US dollar continues to be stronger. Second, there are waning chances of a December rate cut now. What the markets are now waiting for is the U.S. non-farm payroll data that comes in tomorrow. That perhaps is going to be an important data event to watch out for ahead of the U.S. Fed meeting on December 10 and 11.
Okay, Manisha. Thank you so much for that. Surely we'll be keeping an eye out on crude as well as gold prices from where they will be headed from here on. But now let's move on. And in a defining moment in the world of art, a headlining artwork by Gustav Klimt, portrait of Elizabeth Lederer, became the second most expensive painting sold for an auction for a whopping $236.4 million, which is way past the estimate of $150 million. Okay, and with that, we are absolutely out of time on this edition of Power Breakfast. Nifty implied open indicating a bit of a muted start for the Indian market. So let's watch out for that. Just a 1-point uptick now. But up next, your Bazaar Morning Call to take you through all the market action and what we're expecting going forward.